Hey guys, Ace here. So I noticed a fellow trader on the forum make a call on the $CAD yesterday. He said that it was going to go short after this point right here. Let me just show you what that looks like on my chart. So you've got a downward trend line right here, a broadening bottom. So essentially, the point right here would have been a good point to go short. And in fact, I actually did go short. My entry was right here, my take profit was around here, and my stop loss was right up here. Alright, so why did this trade end up failing? Well, let's scroll down to the 30-minute, and you'll notice a bullish pennant. Let me just draw that in real quick. Okay, so now I did spot this setup at the time, and here's what went through my mind. So okay, we've got a short setup on the 4-hour time frame right here, but I also kept in mind that we have a 30-minute bullish pennant. Now, it's very difficult to say that a 30-minute setup will be able to trump an entire 4-hour long-term setup. So with that in mind, I wasn't married to one side of the trade. I wasn't completely sure that it was going to go up, and I wasn't completely sure that it was going to go down. But here's how I approach trade. Some people would just not trade, which is fine. And as I said earlier, I did take a short position right here. And let me just draw that up. For those of you that are familiar with MetaTrader, you'll know what I just did. I just dragged my position, or my close position, onto the chart. So I entered right here, as I mentioned earlier. Alright, so I entered right here and I got stopped out right here. So I lost 0.5% of my account. But here's sort of how I was able to hedge that position. I also took a long position right at the base of this bullish pennant. I realized that the pennant had been broken up, it had been broken up, sort of consolidating, and at this point right here, you'll notice a little shakeout right at the base of the triangle, and after the shakeout, it traveled all the way up. And luckily enough, I did place let me just drag the position onto the chart. I did place my position right at the base of the pennant. So the position was taken right here, the long position. Stop loss is right here, and the take profit was right here. Now, some of you might be confused. How could he take, or what's even the point of taking a short and long trade, sort of at the same time? Well, it has a lot to do with risk to reward, and it has a lot to do with money management. So you'll notice that the distance between here and here is quite small, but it represented 0.5% of my account. So let me just see how many pips that was. So that was about 16 pips, and you'll notice that the take profit was 93 pips. So we had a good ratio of about 1 to 6. So after losing 1% or 0.5% of my account, I made about 2.5%. So you'll notice that sometimes you may not, in the Forex industry, you may not know exactly where price is going to go 100% of the time. You may know that if it were to break a certain point, it will most likely go in a direction. So let me just rephrase. I knew that it would either go all the way down, it would break with force or go all the way down by respecting this upper trend line, or it would go all the way up. Now, most people would just look at that and say, okay, well, you don't know anything. You know that it's going to go up or down. Well, yeah, that's true, but at the same time, if you if you use your stop loss, your money management correctly, you'll realize that you could take trades that actually conflict each other, or also known as hedge trades. Keep in mind that this trade could have ended up as a double loss, but after assessing this trade as I did earlier, this is what I noticed. So just another way to trade the market. Thought I'd throw this video up. Yeah, thank you for watching.